Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means that you can enjoy the dream that is happening right here, right now. Market-wise, let's take a look at it out here. We had the Dow Industrials down 206, Nasdaq off 38, S&P's off 20, gold contract down $17.20, trading at $1,349 an ounce. Silver down 40 cents at $21.27 an ounce. Platinum off 19 bucks at $1,415 an ounce. Copper down a penny and a half at $3.13 a pound. Light sweet crude down 42 cents, trading at $98.02 a barrel. Bonds down a point and 22 ticks at $137.28. King dollar, check this out, up 806 ticks, folks, at 81.55. The euro down $1.14 at 132.78, and the yen up $1.23, trading out at 96.53. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We're at 1628 cash S&P. What do we do? Well, yesterday we got to 1654.19. That test was a 1655. Couldn't handle it. What do? You come off the highs with volume, folks. Bottom line, we're going downtown. You get 1598, the next stop here. Right now, we're at 1628. You go into the Dow Industrials. We take a look at the Dow Industrials. Same setup in the Dow. Dow gets down 206 bucks. Have an expansion with volume. Dow's going after that lower swing point from the 6th, which is the 14,800. I suspect the Dow is going to make a run down. The first run will be about 14,444. What you have here, you got to remember something. So we're Wednesday. We have Thursday, tomorrow with volume, and we have triple witching on Friday. So there's going to be some action on Friday. We go over to the Nasdaq Composite, same setup in the Composite. Composite tested that swing yesterday, couldn't handle it. Just closed right underneath it, too, by the way. It was a close call, man. Bottom line, down 38 bucks today, expansion of volume. Composite's going after this swing low of 33.78. More than likely, you'll see the Composite get down to about the 3,300. If you want to see the correlations inside the ETF structure, folks, it's about as clear as you can get. What do we have out here in the SPY today? Guess what? SPY yesterday did 114 million shares. That was going into the test of 214 million. Couldn't handle it. Comes downtown today with 184 million. They're unloading, folks. The door is not going to be big enough to get out here. So next stop in the SPY, we're at 163.45. It's 160. You'll probably see it down about 156. The 3 Qs, same setup in the 3 Qs. What you have with the 3 Qs is this. 3 Qs, 42 million on the way down. And this is so beautiful. It's sick, actually. So yesterday, folks, what did we do? We did 24 million on the way up, 42 million on the way down. The 24 million was doing what? It was testing the 48 million. You know, if you want confirmation, let me tell you something. It's as clear as a bell. I mean, it's sick, actually. And you're not far away from that swing point. We can get into that swing low tomorrow. You blow away that swing low, you're going to see the Qs down at about $70 in a heartbeat. Now, gold contract. We'll go over to gold contract. Bottom line, King Dollar was screaming, and, gold can't handle it. 125,000 contracts, down 17 bucks. You're coming into Thursday, Friday. It's not a good scene here, folks. 1338 is game. That's the May high. 1323 is game. Coming into a Friday, bad scene. King Dollar. We take a look at King Dollar. King Dollar was screaming out here today. As soon as the Fed announcement came out, what the Fed announcement really did, hey, let me go King Dollar for you first. King Dollar, folks, 47,000 contracts, wide price spread, accelerated volume, all of the above. King Dollar's on its way back up to the 85. Right now we're at 81.54. So the Fed, what the Fed did out here today, folks, Bernanke, bottom line, said the economy's, well, two different things happened. Bernanke said that the economy is improving, and he thought they'd be starting to pull back the bond purchases and the bond purchases, by the end of this year and right into next year. And the bottom line is that the purchases, there's nothing about what's on their balance sheet. The purchases basically going to slow down. And, of course, market screaming. They can't stand it. Nothing like crack, folks. The market's been on crack, and you know what? What cracks me up? Check this out. You gotta really pay attention to this. Do you remember in 2007, 2008, right? When and this is a political deal, no doubt, folks, what I'm going to talk about right now. But do you remember, you have Republicans, you have Democrats, the conservatives or whatever, you can't even name them because it's not really a name. But the bottom line, there were so many people that were turning around saying, oh, the pumping up is not going to work, nothing's going to work. If you heard them on CNBC this morning, they were all basically saying, they were saying the economy's great, but it wasn't because of that. So the hypocrisy in the deal is unbelievable. Okay, bottom line is that no one wants the punch bowl to get away. And hey, listen, I can see why. There's no doubt about that. But you want to pay attention to that in the context of living in general. Let's go to let's see, where am I? Let's go to Dave in Clearwater. Hey, Dave, what's going on, man?
Tom.
How you been, man?
Clear what? I was thinking about you, man. I kid you not. I was like, all right, man, today is going to be a classic either way.
There's no. Listen, man, when I pulled that switch yesterday, I'm saying to myself, oh, man, okay, this is as close as you can get. I know, believe me.
I know, because when your afternoon report came out, I'm like, all right, Tom, this is going one of two ways, man. The market's going to
There's no. So what Dave's talking about is this. So picture this, folks, okay? The art of the time in the trade, there's a specific system that I use on a continual basis, and that's it. And that's all I do, okay? And Dave knows what the system is. But what does happen is that sometimes when they get so close, it wasn't that it failed on price and volume yesterday, but I'm saying to myself, oh, man, we're going into the Fed deal. But, bottom line is that, it worked, so. It's
like a champ,
yeah,
like a champ.
Yeah.
The thing I can't figure out, Tom, I'm curious for your opinion. Thank you for taking my call. Typically, in more normal times is defined as when the Fed's not buying $85 billion a month in securities. In more normal times, market goes down, bond market usually tends to go up. But in light of today's action, this is what I did. Going into shortly before the close today, the bond market, 30-year bond on the futures, on June 11th had a nice sign of strength, 581,000 contracts, goes topside. Today comes back down, tests that candle in light of the Fed announcement on 439, gets below it, closes just right above it. I went long on the bonds. What do you think?
Okay, so let's take a look. I like the trade. I like the trade. What I'm trying to find right now, I got to find what you're going against right now. So were you going against? Oh, you're going against June 11th.
Yeah, I'm going against June 11th.
Man. Yeah, no, I like that trade. Yeah. Hey, I think what you're going to see is this. So. Okay, U.S. So watch this, folks. June 11th had 800,000 contracts, I believe, and today did 440, right? 1 second. So
I'm showing it to be around, well, I don't know how the Reuters, I use Thinkorswim, but I'm running like 581 on the data I show.
Okay, 5 going to 595. That's still all right. It's, I suspect what you're going to have here is this. It's going to be a close call, but when I say a close call, I think your heat on this baby, the most heat you're going to take is about another 10 ticks. That's the way I think this is set up. I think what you'll see is this, is that you'll see the market, Asia's going to be a disaster tonight, okay? Europe's going to be a disaster, and the bond market's going to, when you wake up tomorrow morning, that bond market's going to be up.
That's what I was thinking.
Yeah.
That's what I was thinking. Because, Tom, I was like, on the one hand, do, as Larry Pessimento would say, trade the chart you see. So
right.
I'm looking at it on the one hand, I'm like, okay, to me, that's the bottom of the consolidation. It's the test and lighter volume. Go north, go long on this thing. But then I'm thinking to myself, well, these are crazy times, and not sure how the market's going to digest the possibility sooner rather than later this QE ending, and then that's, reducing the demand, technically speaking, for bonds, since the Federal Reserve is not buying, billions of dollars in bonds each month. So I was like, I don't know, man. I can make a case either way.
No, I think you get a good case. And here, so the fundamental case, technically you get a good case. The fundamental case goes like this. Bernanke, they're not going to basically sell the bonds. They're saying that, hey, guess what? Yeah, we will pull back. But you know what's going to happen, folks, is that the market's going to go down 1,000 or 1,200 points, okay? And that's going to stop them right in their tracks, okay? You know, there's going to be heavy volatility. Next year and a half, folks, hold on your pants, man. That's the bottom line. Hey, Dave, you have a great one, a safe one.